Today on The Bullhorn, Wall Street claws back ground as the Israel-Iran conflict stretches into a fourth day. Tehran signals it wants to de-escalate, markets exhale, and then rally. Oil gives up gains, equities push higher, and China's consumer is back in business. This is your daily global market roundup, sharp, clear, and market ready. In the US, stocks rallied Monday as fears around the Middle East conflict eased just enough to let optimism retake the wheel. The Dow Jones closed up 317 points, or 0.75%, clawing back some of Friday's war-driven losses. The S&P 500 gained 0.94%, settling at 6,033, and the Nasdaq Composite surged 1.5%, closing just shy of 19,700, its highest level in 4 months. The bounce came as reports suggested Iran was seeking an off, asking Saudi Arabia and others to push Donald Trump towards brokering a ceasefire with Israel. Even with missiles still flying, markets read the tea leaves as de-escalation. Brent crude fell 1.7% to $72.99 a barrel. West Texas Intermediate dropped more than 2% to $71.50 as fears over a Strait of Hormuz closure cooled. Gold was flat. The 10-year Treasury yield eased to 4.45%. On the macro front, U.S. factory activity in New York slid deeper into contraction. The Empire State Manufacturing Index fell to -16 in June, a worse-than-expected reading that underscores sluggish demand and pricing pressure. Still, forward-looking indicators turned positive for the first time since March. In London, the FTSE 100 rose 0.28%, and the FTSE 250 added 0.51%, with traders largely shrugging off geopolitical worries. House prices in the UK dipped 0.4% in June, the first monthly drop this year, but transaction volumes hit a post-pandemic high. Among the movers, Entain soared 15% after lifting BetMGM guidance. Metro Bank jumped 17% on takeover talk from Pollen Street Capital. Spectris gained 6% after rebuffing a bid from KKR, fueling talk of a bidding war with Advent International. Carnival climbed 4% after securing a $4.5 billion credit lifeline. Meanwhile, BP and Shell dipped with oil, and gold miners sold off as bullion cooled from last week's highs. Across the continent, the Stoxx 600 rose 0.4%, snapping a 5-day losing streak. Gains in Madrid, Milan, and Frankfurt offset softness in Zurich. Traders welcomed reports that Tehran might be open to talks as long as the US stayed out of the fighting. Kering shares jumped 12% on speculation Renault boss Luca De Meo could take over as CEO. Renault fell 9% on the news. Bundesbank chief Joachim Nagel urged caution on further ECB rate cuts, stressing a data-driven path as markets anticipate the central bank's next moves. Overnight, Asia-Pacific markets closed broadly higher despite the escalating conflict. Japan's Nikkei added 1.26%, with chip testing firm Advantest up nearly 10%. South Korea's Kospi 100 surged nearly 1.7%, led by Samsung SDS and Hanwha Systems. In China, retail sales rose 6.4% in May, the fastest growth since late 2023, helped by holiday spending and targeted stimulus. But industrial output and fixed investment missed forecasts. Property remains the drag. New home prices are still falling, and building investment is down more than 10% this year. In Hong Kong, the Hang Seng rose 0.7%, boosted by Xiaomi and Chow Tai Fook. Australia was flat, but tourism holdings in New Zealand jumped 57% on a takeover offer from BGH Capital. So what's the story? Markets are pricing in containment, not escalation in the Middle East. Crude has pulled back, risk appetite has returned, and investors are clinging to the idea that both Israel and Iran are looking for an exit, not an escalation. But this is a fragile calm, and with G7 meetings, inflation prints, and central bank speeches ahead, that calm could snap quickly. For now, the bulls have the mic. You've been listening to The Bullhorn. Join us again tomorrow And don't forget to follow and rate the show wherever you get your podcasts.